Hey traders, Clifford back with another video on trading the charts. So today I wanted to start a series that talks about seasonal patterns in trading the market. And I believe this can benefit everyone in their trading. So with that being said, let's get started. Okay, so seasonal patterns. Now, this is actually going to be the first video of a series of videos about all the seasonal patterns that I've found in trading multiple different markets and how they can benefit all of us in our trading. Um, First, I'd like to just say, hope everyone had a great holiday. I will say the holidays are a slow time normally for the market. A lot of low volume, low liquidity, and low volatility for the most part because a lot of institutional traders go on vacation and things like that. But there are still some opportunities even in the slower market like this, and some of them have to do with seasonal patterns. So the first pattern we're going to talk about today, it's all about the S&P 500. And the S&P 500 follows a seasonal pattern that can actually be very beneficial to know. Most people who are trading stocks may know about this. Others may not. The way I personally trade the S&P 500 is with the S&P 500 micro futures. And if you want to know more about that and how it can benefit you, definitely, once again, on my YouTube channel, Trade the Charts, there's some introduction to the micro futures. So the best way I believe to look at how the seasonal patterns of the S&P 500 could benefit us is to go, of course, to the charts, but more importantly, go to the historical charts, right? Because that's how we want to catch and find out about these seasonal patterns to begin with. So I found this website here. It's called SeasonX. And SeasonX, basically what they do, it's like a free website that I found where they show you different markets, all different types of markets, whether it's mostly commodities or stocks and stuff like that. And if I go over here, they have a chart on the S&P 500. So let's go to that real quick. Okay. So this is about a 53-year chart of the S&P 500. You could go all the way up to 71 years. Basically, this is showing you what the market's done for this time period. Now, that doesn't guarantee that it's going to do it again every year, but a lot of times it can be beneficial to know because a lot of times it does do it year after year because it's a seasonal pattern. So what I've learned over the years with the S&P 500, the first thing is that normally they start the year off with a bang. Everyone's excited about the new year. People want to see the first quarter, I guess, jump in economic growth. So you see a pretty big bounce here in January for the most part through I guess the spring. And then there's an old adage which doesn't always work, but it is worth mentioning because it used to be that way for a long time until about 10 years ago. But you may have heard the saying sell in May and go away. And that's because, like, in the month of May, from what I was reading, basically stocks are like not the most important thing, during the summer. Vacations are in, families are traveling, people are traveling, a lot of things going on. So it's kind of like sell in May and go away. And as you see over the 71-year period, this pattern used to hold up pretty well. But if I drop down to, let's say, last 25 years, you see it's not as powerful. But I would still make sure that that in the month of May, the stock market can find weakness. And it's important to know that because if you pull up an old chart of the 2008 crash, it actually happened in May. So always be cautious if you're trading stocks in May, or if you're trading the S&P futures, or if you're trading the Dow futures. They are all great vehicles to trade with for that. So those are the first two patterns that I noticed right off the bat was, kick off the year with a bang, watch out for weakness in May, And then finally, we get into the fall. Now, this is the big one, in my opinion. September. Let's talk about September. September, historically, is the worst month of the year for the stock market. And if you don't take my word for it, just look at the chart here 71 years. I mean, look, the thing has dipped in September. I don't know how far, if I can go more than 71 years to show you, but I believe it has been happening like that for like 100 years. Now I'm back to 25 years here. So part of that, I believe, has to do with, we're approaching the end of the year. Companies want to, sell their stocks before the end of the year, lock in their profits, and lots of different theories and factors. Mutual funds are, I believe, squaring up the books I read also. So just different factors involved. But this one you don't want to ignore, in my opinion. This September pattern where the stock market has weakness is pretty powerful. So if you're going to be buying stocks in September, be careful because um, as you see, there's a strong pattern. And just take a look at the chart here. This is a recent chart of the S&P 500. I think this is like a 1 year chart that I'm looking at here, the one that I've been watching, just a 1 year S&P 500 chart. Look at this. So here was January 2021. Boom, started off the year with a bang as usual. Selling may and go away this year. A little bit of weakness in May, as you see. So again, you want to be aware of that one too. But look what happened when we got to September. I mean, as soon as this thing in August, right, we got to September and boom, just like out of nowhere, falls like a rock. But seasonal pattern traders would have been aware that the stock market is, notorious for weakness in September. So if you're long stocks in September, or if you're long the S&P 500, like I trade the S&P 500, or you're even long the Dow, it's all the same thing because you're basically in the stock market, whether it's stocks, index, ETFs, whatever it is. So, and let me just show you one other thing. Look at this here. This is a S&P 500 chart of about, I believe this one's like 10 years or something like that. So look at this. 2021, we had the sell-off in September. Let's go back. Now 2020, I mean, this was a weird year, 2020. I mean, pandemic and all that. So, but even it still followed the seasonal pattern. Look at September. Boom. Pulled back hard in September right here. And then over here to this one, what is this, 2019? We turn the corner, September, boom, weakness again. If I zoom in here, look at that. Weakness again, right? And then over here, August 2018, let's go to September. Okay, here it didn't happen right away, but it kind of builds strength in September. But look what happened. October, when I say September, I'm talking September, and it could even be a little late, the timing of the weakness. It could happen in October as well. So September is normally historically the worst month of stocks, but sometimes it can move into October, spill over to October. Now, not every year it's going to happen. I mean, look at this. In 2017, a little bit of weakness there, not a lot. 2016, there it is again. See, so I just showed you. I mean, I'm just basically looking at a chart here for like, I don't know, maybe 10 years worth of S&P 500 trading volume. So there you go. Definitely September is a good month to either short the market or stay out until the sell off and then buy back in on the dip, which is what a lot of investors did. Like if you look at this chart right here on the S&P 500, you'll see, look at that. It sold off in September and boom, they bought the dip right here. And then the final pattern that I believe is very powerful in the stock market is the month of December. Most people have heard of this. It's the Santa Claus rally. It's the end of the year bang, right? The end of the year boom. It's like end of the year everyone wants to like get back in the market, I forget exactly why it is. I believe part of it has to do with starting to get in before the new year starts, things like that. There could be other reasons that the Santa Claus rally happens in December. I think it's also psychological that the market just people want to end the year on a high note. That could be it. But regardless of why it is, again, I'm more of a technical trader, so I don't necessarily look at all the fundamentals, but look at this, 71 years in December, boom, Santa Claus rally, if that's what you want to call it. And look what happened. This is the current year right here. Look at this, November. As we turn the tide in December, stocks were forming support levels here. If people bought in at these levels, boom, they would have ended the year in profit, right? And you could go back in time and look at other years as well. You'll see that most years it ends with a bang as well. So that's pretty much the main seasonal patterns I've noticed in the stock market. Others may talk about the earnings season and all that, but earnings can go either way. So I don't know that much about earnings. I'm more of a futures trader and a index trader. But as far as seasonals go, I think these are the best seasonal patterns right here. Sell-in may go away. Be aware of it. Hasn't happened for a while, but still, you want to possibly look out for some weakness in the month of May or even June or the summer in general. September, historically, be aware that that thing could crash. And then finally, December, get ready to go long again on a pullback. I mean, technically speaking, you could wait for the dip in September and go long again then. Um, and basically, I believe that that's going to help everyone out in making more money in the stock market. Or if you trade the stock indexes like I do, S&P 500 or the Dow or the Russell or whichever one your favorite one is, as well. So I hope that helps some people who are new to seasonal patterns in the S&P 500 and the Dow, because I believe those are pretty powerful. If you enjoyed this video, feel free to leave a like, subscribe, put your comments below. Look forward to seeing you guys in the next video. And in part 2, we're going to go on ahead and look at another market that has a very strong seasonal pattern, seasonal tendency, and that is crude oil, the energy sector. So be on the lookout for that video, and look forward to seeing you guys in the next one. As always, my friends, trade what you see on the charts, trade well.